Hello and welcome to another update video about VeChain. Yeah, we want to take a look at the bigger picture here. Due to this move that we've seen, I made a video only yesterday and I did not imagine that my target would be reached within a day, basically. The target range I communicated before for this move on the VET chart was between 4.4 cents and 4.95 cents. Okay, so I haven't marked it here anymore, not in the long-term chart. But I mean, it's been reached, so it's time to recalibrate. I have to say the move up is quite strong, so it makes me look at the bigger picture again, the long-term chart. And obviously, as you know, it's not the greatest long-term chart. I said that before. We have 3 waves up into the all-time highs. Never good, never good. But it's time to discuss some possibilities then on the larger time frame. So, for example, we've got here initially a rally in an ABC structure. Now, that could be an A wave of a larger ABC structure, okay? It could also be a wave 1, for example. Could just be a wave 1. This is a wave 2, but then it would all be a larger diagonal, which is how I've labeled this now. So ABC in wave 1. This would be a wave 2 pullback ABC anyway, so that happened. Then the wave 3 would be an ABC. We would get a wave 4 and a wave 5. This is a reasonable approach to take, or just to see it all as a larger A, B, C. The difference would only be in the subwave structures here along the way. The main problem that we have with such a situation, if we have a 3-wave rally, we always have the risk that the move down was a wave 1, and that this is a wave 2 corrective rally, and then we break down completely. That risk exists, which I have highlighted here in yellow on the chart. So it's just something that specifically with charts that rallied in 3 waves initially, it just allows for that interpretation. So I leave it on the chart, and we have to leave it on the chart until we get a break above around about 28 cents, which would be the invalidation point for the yellow count, which can send us down into the abyss after the bullish run, okay? I just want to highlight that. It's always worth knowing about such a scenario when it is not unlikely. But we're in a bullish market. I've been saying that for a long time now, and I'm predominantly following bullish scenarios until the market breaks support levels. We recently had here our swing trading entry point for anybody who wanted to use it. Highlighted in orange on the chart. These were the support levels. And we've now left it to the upside. So the thing is, what could this be now? In previous videos, I showed you, one second, I showed you my idea that we have a wave 1 in a diagonal pattern. 1, 2, 3, 4, 5. Still possible, but I have to say this move up looks very impulsive. And if it goes much higher than that, I will dismiss this idea. If we get a pullback from this current region, I mentioned my target range, then obviously we would be dealing with a wave 2 pullback, and I will add another support area, and then we can look at the 3rd wave rally. It is possible, however, due to the impulsiveness of this move, even though we haven't reached above my target, but it seems like it wants to attack it, like the 4.9 cent level, and we have to remain open to the idea that this is actually a C wave rally. And then we have to take it from there once we completed the C wave. Then we have to deal with the question, okay, is this just a wave 2 rally in the bearish count? Or is it a larger A wave of an even larger 3rd wave, okay? So that's just something to be aware of. It's too early to say that now. It's too early, but we can follow the C wave itself. And where should that C wave take us? So if we're dealing with an ABC structure, then a typical initial target for a C wave is the 100% extension level. Also relevant the 1.236, the 1.38, and the 1.618. So yeah, we've got a target range for the C wave now. That means if we see a sustained break above 5 cents, I think it's going to head towards 7.8 to maybe even 15 cents. Okay, so it's something to be aware of. And when do you know that it's breaking down? Well, best way to do it is to just use the 50% retracement. All right. How do we do that? Well, it's typically from the last swing low. we take the rally, length of the rally, and it's the 50% FIB level. So this would be micro support. It's now at 3.65 cents. Once that level breaks, you know, we have a top of sorts in place. And it could then be that this is actually this diagonal pattern that I mentioned. And also pay attention to the upper boundary line of the trend channel. So that has not been broken yet. I think a combination of breaking above 5 cents and above the upper boundary line of the trend channel would suggest that indeed this C wave is unfolding. Until then, and I haven't got it on the chart anymore, but it's still likely. I don't want to confuse people, but you know, it could be a 1, 2, 3, 4, 5. It's just that the way this is going, I'm just very much aware that unless we see a break below that 3.65 cent level, it could just keep going. Okay, we just need to observe that. I mean, we've been talking about an altcoin season for a while. We just need to be very sensitive to this topic. And then when it starts, we want to go with it, right? We want to go with it. But that's the purpose of these support zones, to layer in or position oneself for these potentials. Okay, that's my update about VeChain. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.